All right, so I want to welcome us to this afternoon training session, and we're going to be looking at Ichimoku Kinko Io. Now, before we start, I want to know how many of you have really used this indicator before? Let's start. That's the first question. If you have used Ichimoku before, can you just raise your hand up? Let me see you raise your hand up. Anybody? Okay, I'm not seeing anyone raise their hand. That means none of us have used this indicator before. Okay, so if you have ever wondered how it works, you've seen it on MetaTrader, but you've never knew how it works, can I see your hands up also? Anyone? Okay, I'm not getting a response on that one. All right, thank you. Thank you, Mr. John Egon. So you've been wondering, how does this thing work? You know, all right, Stamp also is saying the same thing. It confuses you. What does it look like? I mean, what it looks like, it looks so confusing. You don't know how to get started with it, how to use generic signals. Don't worry, relax. That's why we're having this webinar this afternoon so that we can show you how this indicator works. Now we're going to simplify it, break it down to the barest minimum, which is what we do here at PU Prime. Our job is to make the complex very, very simple and very understandable so that it can become profitable and well educated about how to trade the financial market generally, of which Forex is just one of the arms of this market. All right, so let's start. So if you're joining us for the first time, my name is Rotimi Olawale. I'm a chief analyst of PU Prime right here and in the Lagos office where we're broadcasting from this afternoon. All right, so Ichimoku Kinko Io, often simply called Ichimoku, is a versatile and visually intuitive technical analysis indicator used in forex stocks and commodities. You can see the word versatile and visually intuitive, meaning it is an indicator you can visually identify. You can spot it, you can look at it, and merely looking at it, if you know how to read it, you can easily determine whether the market is going to be buying or selling or ranging using this indicator. It was developed in the late 1930s by Japanese journalist Goichi Osoda and published in the 1960s. The term Ichimoku Kinko Io translates to one glance equilibrium chart, meaning that traders can gauge market sentiment, momentum, and key price levels just at a glance. Just looking at the chart once, you can have an idea of what is happening in the market. Unlike most indicators that focus on only one aspect of market behavior, Ichimoku offers a holistic view, combining, now take note of this, combining trend direction, support and resistance, and momentum, all within one framework. So these indicators combine trend direction. It's going to give you direction of the market. It's going to give you support and resistance, and also it's going to give you the momentum, the level of volatility in the market, all on the same, framework. Sometimes on the same time frame, you can get the information about all these things that I just have listed. All right, let's move forward. So Ichimoku cloud indicator explanation. It consists of 5 moving averages and lines, and each line has a specific function. We have the one that is called the conversion line. We have the baseline. We have the lagging line, the leading line A, and the leading line B. These are the 5 moving averages that form this Ichimoku. And this is what the Ichimoku cloud, this is what it looks like. You can see, let's start with the leading line A, the leading line B. You can see the conversion line, you can see the baseline, and the lagging span. Now, the main cloud area is this region that you can see colored red up there and green on the other side. This is where we call the cloud. And this is a conversion line. Now, the conversion line are 2 sets of moving averages. Now, if you understand how moving averages work, you know how you can combine 2 moving averages where in which case you have a fast moving average and a slow moving average. That is the same concept that has been adopted into the conversion line and the baseline, in which case the conversion line is a fast moving average while the baseline is a slow moving average. Now, the last one is this one that is outside here, and it is called the lagging span. This one is used to identify momentum. Like now, the moving average area, which is the conversion line and the baseline, can be used to determine direction. The cloud can be used to determine support and resistance, while the lagging span can be used to determine momentum. So this is how this indicator works. And it combines both trend, support and resistance, and momentum all together right on your charts. So the conversion line, let's go back so that I'll show you the conversion line. This is the conversion line. This is what I can as well call the fast moving average. When we have two moving averages, maybe a 5 EMA and a 10 EMA, where the smaller one, which is the 5 EMA, is a fast moving average. That's exactly what is being incorporated here. It is called the conversion line. So let's read what it's all about. The conversion line is a 9-period moving average. It uses data of the previous 9 candlesticks to determine the current average price. The baseline, which is more or less a slow moving average, the baseline is a 26-period moving average line. It uses the data of the previous 26 candlesticks to determine the current price. Then the lagging line. This line lags 26 candlesticks back the current price line. The deviation of this line represents the strength of a trend. That's the momentum or the volatility. It uses the closing prices of the candlesticks. Let's flip back again. We have this as the conversion line, the baseline, and the lagging span. So this is what the dashboard looks like. You have the inputs, you have the conversion line, it's a 9 moving average, the baseline 26, the leading span B length 52, displacement 26. These are custom settings that is already defined on the platform. You don't need to change it. Now we have what is called the leading line A and the leading line B, and this is what forms the majority of the support and resistance area, which is the cloud section of this Ichimoku indicator. Leading line A is the average of close line and baseline. It is used as the boundary line of the cloud, while the leading line B is a 52-period moving average. It uses the data of the last 52 candlesticks, and it is also used as the boundary line of the cloud. So let's flip back. This is leading line A. This is leading line A, and this is leading line B. You can see this is the leading line A here, and this is the leading line B. But then combined together is what we can refer to as the cloud of this indicator. So how does Ichimoku cloud work? The main feature of the Ichimoku cloud is to determine the trend. Cloud is formed by two lines leading the line A and the line B. Bullish trend. If the leading line A is below the leading line B, the trend will be bullish. We're going to check that out. Bearish trend. If the leading line A is above the leading line B, then the trend will be bearish. So let's go back now. If the leading line A is below the leading line B, then the trend will be bullish. And if the leading line A is above the leading line B, then the trend will be bearish. That is exactly what we have right here. The leading line A, the B is below the A, so it was a bearish trend. And we have a clearer one moving below. So here we have it. This is the bullish. This is the leading line A is above the leading line B, so we have a bearish trend. Here, the leading line A, this is A and this is B. This is A and this is B. This here is A and this is B. So when the B is below the A here, it's a bearish trend. When the B is above the A, it's a bullish trend. Now we'll look at trend reversal using the Ichimoku. There are two main ways we can trade the market. We have, as in using Ichimoku, we can have trend continuity and trend reversal. Trend reversal is the first one we want to look at, and it's talking about when the market already has an established trend. In this case, probably a bearish trend. But we're not looking at a time when price will reverse. Price gets to a reversal point, in which case price is reversing from bearish to bullish. How can we capture that with the usage of this Ichimoku Kinko eel? And this is how we'll do it. Look at this diagram on the screen. You can see here a place labeled breakout. And what happened at the breakout? You can see that there was this sharp, big bullish candle. The overall trend has been bearish all along. And there was this sharp, big bullish candle. Now, at the close of that bullish candle, we can see that there was a reversal. The bearish cloud reversed here to bullish. You can see that the other lines here, the one I call the fast and the slow moving averages, they crossed above each other, and the lagging span is above all of them. So here shows a complete reversal from bearish to bullish, and you can see that price, kept trending high. This is an example of how to use Ichimoku in a reversal trade. Wait for a clear. Now, don't forget that this cloud area is used to determine support and resistance level. So it's as much as saying that at this point, price reversed by breaking, below this support level, and is now in an uptrend. And that candlestick is that reversal point. Now, many times this is what happens when there's a reversal on the Ichimoku. You will see a candlestick that shows you a clear break, a clear change of direction. Then you will see that price breaks the cloud, it turns out, it reverses. Then the moving averages also cross, above. The fast crosses above the slow, and the lag span is also above in a bullish trade like this. And from then on, you see that price keep trending higher. We're actually going to check it on a live chart. This is just the diagram we're looking at the moment. So trend reversal using Ichimoku cloud identified a big candlestick breaching through the cloud, conversion line, and the baseline. Wait for price to give a minor pullback and let the price bounce from the conversion line or baseline. Then place a trade after bouncing from conversion or baseline in the direction of the breakout. The cloud must indicate the trend in the direction of the breakout. The span of price and lagging line also must be large. It's still talking about that previous diagram. You can see we had a very sharp breakout candle here. We can see the lagging span is way above the price. You can see the support and resistance here has been broken, clearly broken. And you can see here the moving averages has crossed the fast, crossing above the slow. Yes, it took a while. There's a gap between all of it, and that's why sometimes in some instances it may not be an instant entry. You need to wait for the conditions to be met. Usually when you're using indicators, the indicators require patience. You need to wait for alignment. Alignment means when all the conditions of the indicator has been completely met. Then you can trigger your trade. So we've looked at reversal setup. Now we want to look at trend continuation using Ichimoku. Now, in the case of trend continuation, what we are saying is that there is already an established trend. In the diagram you can see on the screen, there is already a bearish trend. How do we know it's a bearish trend? We can see the cloud is already showing us the red, in the color, indicating there is a bearish trend. So once the trend has been established, here what we want to look at now is not a reversal, but a continuation, meaning we're looking at a bearish signal under the bearish trend. So how do we do that? Firstly, again, we look at a candlestick pattern. It makes the work a lot easier. In this example here, you can see that there is already a bearish engulfing candlestick pattern. Then you can see the lines crossing. The first one crossing up, below the slower one, and the lagging span is way. Now, why is it important that the lagging span is far from the candles? It's important because that is what shows that there is sufficient volatility to drive the price. If the lagging span is very, very close to the price, to the candlestick, it means the volatility is not so much. And in most instances, price may just reverse from there, back into a buy, like in this case, and the trade may become a losing trade. But if the lagging span is far away from the candlestick, it indicates that there is a lot of volatility to drive the price downwards. So you can see in this case, entry will have just been, you have a bearish engulfing candlestick, we have a clear cut crossover of the moving averages here. If you trigger itself from that place downward, you can see price was able to make a decent run downwards. And like I said, if the lagging span touches the candles like it happened here, from this point on, you can see that market began to range. A range started immediately. So the lagging span is always better to be very far from the candles, because that is what indicates that there's a lot of volatility to drive the price downwards. So let's look at trend continuation using Ichimoku, the write-up. It says Ichimoku cloud indicator can also be used to trade with the trend. The following steps is to be used. 1, for a buy setup, confirm that the price is moving above the cloud and the color of the cloud is green. The span of price and lagging line must be greater. We already established that. Wait for price to bounce from the cloud in the direction of the bullish trend, because cloud acts as strong support and resistance level. I already established that the cloud acts as a strong support and resistance level. So this is the Ichimoku cheat sheet, just a summary of everything we've done so far. Again, for a trend reversal, you can see there was a sharp reversal candlestick pattern. The cloud changed from bearish to bullish. The moving average crossed from the fast moving average crosses above the slow moving average. The lagging span is far from the price, and you can see price kept trending higher. It kept trending higher in a trend reversal. In a trend continuation, there was also a reversal candlestick pattern. The overall trend is bearish. That is already established. And here we can see that the trend kept running downwards also in a bearish direction. Now, this indicator is not so complex. It's just to be able to break down the parts. And from then on, it becomes very, very simple and very easy to use. Strengths of Ichimoku. Ichimoku is an all-in-one tool because it can give you the trend, support, resistance, and even momentum in a single view. Forecasting ability. Now, there's a part of it called the Senkyu. I don't want to go into the complex name so that it doesn't become difficult for you to understand. That's why I use moving averages. They're actually moving averages, but then there are also like Japanese names used for them, which I don't want to make it complex by going into those names. So let's just take it as moving averages. So with Senkyu spans projected forward, it anticipates future support and resistance. Clear visual signals, easily identifiable signal and setup. So it's very easy to identify your signal and setup with this indicator. Adaptable, it works across all time frames. Though I would say be careful of lower time frame like 5 minutes and 1 minute. From 15 minutes and above, it's just good to go. Weakness. Now, there is also everything that has benefits will also have disadvantages. One disadvantage is that the chart is cluttered. It can be overwhelming for beginners, and that's the reason why many people don't use it, because they feel like the chart is too clouded with too many things. Most people like that chart to be very, very clean, but Ichimoku Cloud is not like that. It adds a lot of things to look at, which can discourage beginner traders. So the chart can be cluttered, and also there's a lagging nature like all indicators, it follows price. It follows price, and that makes it a lagging indicator. It's not leading. It does not predict price movement ahead before the movement happens. It follows price wherever price is going. And that means price, it can delay in how it reacts to price. That's what it means. Then other one here is that it's not ideal for sideways market. Now, when the market is ranging, it can produce false signals. So it's to be avoided as much as possible during periods of low volatility when the market might be ranging. So avoid it in such instances. All right, so that's all on the theory part of this class. I'll flip over now to my chart to show you this indicator, even how to install it, on your trading device. So I will send you, or you want to speak to me instead? Okay. All right. All right, so I'm flipping over to MetaTrader 4. All right, so this is what Ichimoku looks like on the screen. Now, I will install a fresh one so that you'll see how I do it. Now, if you have any background before, then you want to install Ichimoku. This is how you do it. You click on this. Okay, I already have the Ichimoku saved as a template, but notwithstanding, you just come over to this indicator menu. This area I circled. Click on it. Go to trend. Under trend indicators, you will see Ichimoku Kinko EO. So let me click on it now, and you can see the setting is there, 926.52. Click OK. Now it's off. The background here is white, so it's difficult to see. So, but I already saved the template in a black background, so that one is a lot easier to spot. So I'll click on that now. So this is it. This is what it looks like on a black background. You can see it's much more visible, clearer to spot, compared to the white background. So this is Ichimoku, and this is Euro USD. And all what we've been saying is this, looking at this chart, this is the lagging span. This is the support and resistance. And these are the moving averages that we need to allow to cross over for us to, get our trading opportunities. Let me go to another currency pair. That's Euro USD. This is GBP USD. Now, what we're saying is this. Now, look at this scenario here. We said for a bullish trade. Now, you can see here the trend is bearish. Here, the trend is bullish. Here, we're looking for a reversal from downtrend to uptrend, from bearish to bullish. How did it happen? We saw there was a reversal candlestick pattern right there. That's like a bullish engulfing candlestick. And when it happened, the cloud reversed from bearish to bullish. Then the lagging span is, at a distance. It's not touching the candle. Then the fast moving average, which is the red, is above the green. The changeover actually happened somewhere around here. So the conditions were met. We have a reversal candlestick pattern. Price is above the support and resistance zone, which is the cloud. Then the moving average already crossed from this point. And you can see that price actually went bullish. But I said something that as much as possible, it's good that the lagging span is a distance away from the candles. Yes, price went up in this case as much as about 41 pips. Then the lagging span came too close to the candles, and price, anytime the lagging span touches the candle, price will reverse. It will reverse. If it touches it, it's going to reverse. That's what led to the retracement. This is actually a retracement that happened here up until there was another major breakout here. which saw price going up, retracing, and continuing higher. Now, this happened, today is 23rd. This movement on GBP USD was between Monday and now. Between Monday and now, using the Ichimoku indicator, GBP USD has generated about 114 pips between Monday and this moment as we are speaking. 114 pips generated with GBP USD using this Ichimoku indicator. Let's look at another one. Let's look at gold. I know there are some of us that like to trade gold. Look at gold here. You can see the breakout also. Now, in this case, gold has actually been, now for me, I like to filter. I like to do multiple time frame analysis. It gives me a clearer picture of the market. So I put in my own flavor of strategy into this by going on the higher time frame. Like on gold now, I can choose to go on the daily and see the overall trend. Now I can see the overall trend of Ichimoku on daily time frame is already bullish. You can see it's been bullish for a very long time. Price has been trending up. So that means if I go to a lower time frame like 1 hour, I'm also looking for a bullish breakout. So on 1 hour, we can see that there was a breakout here. And we have the support and resistance zone here. The moving average already crossed over. And the lagging span is far from the price. Now, let's look at the entry area. This is where the clear-cut breakout happened. And this also was, okay, this is starting on the 18th. 18th should be maybe last week, Friday, thereabouts. Between then and now, gold has generated about 800 pips, 870 pips, using this Ichimoku Kinko Ale. Three things it identifies for us. It identifies trend, it identifies support and resistance, and also momentum, which can also be called volatility. You can see it's just in line with what we have done this afternoon. All right, let's look at the USD CHF. This is the USD CHF. You can see there was a breakout of price also in the bearish direction, breaking out from below the resistance zone, the moving average crossover. Price is far from the lagging span, and there has been a massive bearish movement on the USD CHF. And so far, the USD CHF has generated about 80 pips between Monday afternoon, and now using this indicator. All right, I'll check the last one now, then we'll take questions. And the last one is the USD CAD. This is a 1 hour time frame. You can see the trend here is uptrend. Price hit the resistance and reversal started. So we have the initial breakout was actually here, but again, price was too close to the lagging span. It retraced back to the resistance zone from where we now have, I think we have a reversal candlestick pattern here, like a morning star. And okay, there was a morning star there, but the moving averages crossed over more around this area here. Yeah, this is where we have the moving average crossover. And price is very, very far from the lagging span at that point. And from then on, we can clearly see price dropping on the USD CHF to the tune of about the 130 pips, 129, that's approximately 130 pips on the USD CAD using the Ichimoku indicator. So like I said, you can add your own flavor. For me, my flavor is multiple time frame analysis. I can, look at a higher time frame to still gauge the direction. Like the USD CAD now, I can go on the higher time frame. Like you can see, it's a bearish trend on the higher time frame, which is the daily, while on the 1 hour, I look out for my entry, and that's just it. All right, so that's all we have for us this afternoon on the Ichimoku Kinko EO. If you have any question on the start to take questions, go ahead. You can either type it in the comment section or you can unmute your mic and ask a question, and I'm right here to respond to you. So while we're waiting for the questions, don't forget our 5X group is still running. The peeps are still coming in. You know, peeps keep raining every single day. And you learning Ichimoku today, you can add to your profitability, even as an independent trader. You say the goal at PU Prime is to make you profitable overall with education, with the technology and solutions to make sure you're profitable in the Forex market. All right, I'm waiting for questions. Okay, if there's no question then, I think we might just have to round up here. That means we're all good with everything that has been done. So what I will encourage you to do, if it looks a little complex to you, it's quite understandable. But very soon before the end of the day, I'll be dropping the link to this video again. Take your time to go through the video, watch it again, but most importantly, start practicing what you have learned. You see, if you learn something and you don't practice it, it's just going to fly away. It won't do you any serious good. But when you watch, when you learn and you put it to practice, you are already on the way to success with that thing that you have been taught. All right. Steve is asking, can we take trade when price is on? Okay, I'm not getting. You wrote Tomoku. Do you mean Ichimoku? I'm not getting what you're writing there, Mr. Steve. Can you explain further so that I can get your question correctly? While we're waiting for Mr. Steve, Mr. Shew is asking, how can we join the 5X group? Please reach out to your account manager to join the 5X group. 5X is our premium signal group. Premium, as in the rating is high. The pips are high probability. I'm telling you, over 1,000 pips generated since inception. We started this early June, thereabout, and as at the ending of June, actually, we've generated over 1,000 pips. So if I'm telling you over 1,000 pips, now this is already July. We've done well over maybe 1,200 pips or more. We're already even getting towards the end of July. It's much more. That 1,000 pips was, I think, the ending of June and the first week of July. That was when we hit 1,000 pips. And we've had about 2-3 weeks into the month of July already. So the pips have grown more than that. So if you're not in that group, you are missing a lot. You're missing a lot. Reach out to your account manager to get you added to the 5S group. It might require that you do a fresh funding for that because it's premium. You're not paying for it, but you need to put in some deposit to be able to access that group. All right. As Steve is asking, this indicator it's already on your MetaTrader. If you join early, I already showed you how to activate this indicator. It's on your MetaTrader. But since you asked now, I'll show you how to access it. All you need to do is to come to this indicator menu. If you can see where I will circle up there. All right, if you can see that blue section that I circled, you click on it, you go to trend, and on that trend, you will see Ichimoku, Inco Hill. So just click on it and that's it. You have it on your screen. It's not an external indicator, it's already there on your trading platform. Even on your mobile phone is there. You can install it on your phone also. It's not something you are getting from third party. It's already on your MetaTrader platform. So I hope that answered Mr. Steve. All right. So in the absence of any other question, we're going to round up. We're going to call it a day here. Like I said, make sure you watch the video once I drop the link. And most importantly, start putting what you have been taught to practice. All right, we'll come your way again for another online session by next Monday. Our online classes are just on Mondays and Wednesdays. So watch out for another impactful training topic next week, Monday, where we'll have another online class like this. Take care and enjoy the rest of the week. Bye-bye.